crypto regulations. We've seen Gary Gensler today, total shit show, being questioned about is Ether security, all of this stuff, refuses to say anything. I think the questions asked were pretty right, is why can you not give guidance to people? Do you want to drive away innovation from the United States? And I don't think anything with the SEC makes a difference. The US is not the world. I know, sorry to break it to you guys. You may be the world's biggest economy, but as I explained in financial markets, these things are liquid. They shift. They can go anywhere where capital is treated well, and they will. Now, they're not going to ban crypto from individuals in the United States, but they're trying to make it hard for businesses to grow, so they'll just move to the UK or Hong Kong or Singapore, and the world moves on. We've seen it all before. So I think it's a total red herring to even care about what the SEC does. It's a shame for the United States. For the rest of the crypto market, it's just all noise.
What's going on, guys? K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great start to your week. Bitcoin's still hanging out around this level. You can see we attempted to have this break up here. We got up to about 28,000 and we just got rejected. So now some people are saying, is this starting to look a bit like a bear flag? That is a possibility. Look, we did say that we were at that critical level. We were looking for a potential pullback, right? You need to have that healthy retest. However, there's two things that are going on right now. Number one is a signal, okay, that we've looked at before. Now, the last time that Bitcoin did this, Bitcoin pumped 1,200%. I'm not making this up. I'll show you in the charts in just a minute. However, there is a little bit of a catch, not only with what happened specifically, but also the fact that we have some on-chain data right now that's actually showing something just a little bit concerning, all right? So we're going to talk about what this means. It has something to do with the retail investors and how the whales and the big smart money are responding to it. Now, obviously, guys, the US continues to struggle right now, right, with the SEC and the lack of clarity. And there is that talk of, moving to these other countries, moving to these other places. But what I do want to talk about is why a massive wall of liquidity could be coming in for Bitcoin and cryptocurrencies either way. And I just wanted to say this before we even get into the video, guys. Did you see this video from the World Economic Forum where basically they're talking about data centers, but it's literally, they're showing Bitcoin mining rigs and miners, and the company that was responsible for it is involved in Bitcoin mining. So did the World Economic Forum actually just promote Bitcoin? We will get to that. And one funny thing, just want to just mention this before I thought this was cool. So this is the Bitcoin block. You can see all the blocks. Basically, these are them. And we're at 786, 823. But if you actually go back here, I thought this was pretty cool. This message was in block 666, 666. Yes, so obviously that's not a good number, right? But right down here, you can see, do not be overcome by evil, but overcome evil with good. So I thought that was pretty freaking awesome, guys. So if that sounds good to you, you know what to do. If you're not subscribed, definitely get subscribed. And did you also see, real quick before we get to the charts, I just thought this was a lot of interesting things. An Ethereum ICO participant woke up after 7.7 years of dormancy. He received 2,365 Ethereum. At the time, it was 31 cents. So he paid like 700 and change dollars, and now it's worth 4.42 million. Although the bigger question is, why after 7.7 years is this account finally waking up and sending one Ethereum as a test transaction? Are they looking to dump? Well, I don't know, guys. We'll see about that. And make sure if you are going to the Bitcoin, at least the after party for 60 bucks, guys, get that 10% discount below. So let's dive in. Let's have a look. A lot of cool little stories I wanted to start off with, but now it's time to focus and get serious because we got to talk about the charts. So as you guys can see right here, again, not going to beat a dead horse, but we did hit the top of this blue area, right? I said anything above here is like probably super short-term take profit area, and we said anything below here is super buy the dip area, right? So we are at the top, which is where you would expect it to get a little bit overheated. And I was saying that I'm expecting a retest minimally down here at around 25,300. Now, we may never get it, but I think the likelihood of us getting it is pretty good. Now, could we go even lower than that? Well, it's possible, because one interesting thing when we've been looking at these moving averages, you notice that we've actually fallen down to the 300, which is very interesting, right? So we've had the support on the 2 here, technically closed above here, and currently we are above it as well. But you'll notice that when we came down here, it's almost like the 300 was providing support / resistance this time around, right? So I personally think that we've spent enough time down in this area to convince me that we are most likely, and of course this is just my humble opinion, I could be wrong, I don't think you're going to see those prices that everyone is calling for. Could we come down and retest again in the 19,000s? Sure, that's possible, right? Retest the top of this band. But are we going to get lower than 15? Are we going to 10,000, 9,000? I don't think that's happening, guys, because we are seeing something right now, and we've spoke about this over on the weekly. Now, this is the EMA ribbon chart. Now, generally speaking, when you're below it, it's bearish. When you're inside of it, kind of neutral, right? Kind of got to take a guess. When you're above it, it is generally speaking bullish. You could see, we got above it right here, and we stayed above it for quite some time. Right here, we finally dipped below it. We tried to break out, but we got rejected, right? So as you guys can see right here, we are actually closing above it, and we're closing on the 89, right? That's kind of that outlier. So what you're looking to do is you actually want to see the bands twist, right? Fold over. So for example, you could see this yellow band is on top, right? And when the yellow is on top, you notice that we tend to stay above it. When the band flips and the yellow goes on the bottom, you notice that that's when we tend to stay below it, right? Well, currently right now, you can see that this yellow moving average is attempting to break its way to the top while we're being supported on the 89 lavender. And if we actually come over here to the last time that we did this, you would basically say, that it was, this point right here, right? Where we finally broke above it. And then look what happened. So we got above it right here. The band twisted. And what ended up happening? So from that point, I mean, I don't have to do this math, but, you guys could see from here to the top, that was 1,200%. Now, I do want to just point out that we did go up to 14 and come back down, right? So, from that point, down to here, we did take about a 30% dip, and that took a while, right? That was about almost a year. That was almost a year. So if we were to take, let's just say hypothetically, a 30% dip from this point, just to, kind of play devil's advocate here, that would bring us down to about $19,200. It still wouldn't put in the lower low. And, this is assuming that we do something like this, right? We do something like we come down over here, we come up, maybe we don't reach the previous high, we get a fake out at around 48, which, by the way, we have said that if we take this right here, that is a possibility, right? From this breakout, right? We have a target up here at around potentially 57,000, 47 to 57 roughly. So if that is the case, and then we were to have the giant pullback, we could see something like we saw back here, but keep in mind that this was because of COVID. So, really, if you kind of just look at this and you ignore this little COVID dip, it kind of looks like we were just accumulating to the upside anyway, right? So, and Michael Vandepop also says, maybe bear flag potential dump to the bottom. So we are kind of agreeing on this. Now, what is the concern, though? Besides this short term, it seems pretty bullish, right? Well, according to Glassnode, the Bitcoin amount of supply last active 2 to 3 years has obviously really increased. So this is showing that a lot of people are now moving their Bitcoin around. So is this a good thing? Is it a bad thing? What are they looking to do? Well, if we just look at data from Santiment, if you look at historical highs and the losses, we're basically in a nutshell right now, we're seeing about 3 loss transactions for every 1 profit transaction, which means that people are actually still selling for losses right now. So this is telling me that there are short-term people that maybe bought above 30K. We got to 30K and they were like, screw it, I made back half my money, that's enough for me. Because you can even see, like Glassnode points out, so the blue is the long-term realized loss and profits, and the pink, or whatever color this is the short-term. So basically, this sort of very light, peach or whatever color right here, is at pretty high right now, up around the price, and you can see that is short-term realized losses, which means people that just recently bought Bitcoin are selling for a loss. So that tells me that that's retail, right? That's not the institutions. Now, interestingly enough, we had fire charts by material indicators pointing out that it does seem like there has been some intentional suppression. So what this is telling me is that you are having big players buying at these levels, but then also trying to suppress the prices, right? A block of ask liquidity suppressing it. But like Mustache says, smart money is probably done, or at least very close to being done accumulating. He says, if you look at this QQE, when it's above zero, accumulation generally ends. And, just to show his indicator down here, it looks like that's exactly what we're doing right now. We're entering into that phase. So they say, he says bears are happy about a few red candles, but yeah, it's probably by the dip time, not financial advice. Now, Raoul Pal, who you saw in the beginning of the video, he's talking about liquidity coming back into the markets, and he says we're going to see the next rise of the crypto story, and it will go from 300 million users to 1 billion users or more this cycle, and there will be applications you haven't even dreamt of or things that you thought weren't coming that will come at scale, whether it's digital identity, massive cases of Web3, DeFi, something entirely new, ticketing via NFTs, etc., right? Now, of course, you might be saying to yourself, well, what about the situation, in the US? And, unfortunately, he kind of just says that they will probably just end up moving their businesses offshores. Not to say that that's what we want, but it's what's gonna happen inevitably if things continue the way that they are.
Crypto regulations, we've seen Gary Gensler today, total shit show, being questioned about is Ether security, all of this stuff, refuses to say anything. I think the questions asked were pretty right, is why can you not give guidance to people? Do you want to drive away innovation from the United States? And that is what I've been talking about for a while. I've talked about on Daily Briefing, I've talked about on Real Vision, I've talked about on Twitter, is I think the UK is almost uniquely positioned to take a lot of the crypto businesses. We saw Brian Armstrong from Coinbase over in the UK talking to the government, and that is not the only organization that's been over there. And you see, we've seen this before. England has one great trick. It has a incredible financial system, democracy, and they speak the English language, and they have great trade linkages with the entire world. So when the US stumbles, particularly in financial markets, the UK picks up the slack and does something called regulatory arbitrage. All the US banks at this stage, over the 90s and 2000s, after Big Bang, which was the deregulation of the banking industry in the UK, everybody moved to the UK to set up business. So Goldman's main office, London. JP Morgan's main office, London. Morgan Stanley's main office, London. Merrill's main office, London. Credit Suisse, London. SocGen, London. Paribas, London. HSBC, London. Everybody went to London. But here we are again. There's a $1 trillion industry called crypto. It has been $3 trillion at peak. This is not a small industry. And most people project it to grow to, let's say, 10 trillion would be gold. Now, gold is based in London as well, regulatory arbitrage. So the UK is looking at this thinking, okay, we need a relevancy in this world. We lost most of it because of our divorce from Europe and then having to renegotiate trade agreements with every country in the world because we didn't have the European agreements, all of this, and also the loss of manufacturing in the UK and the loss of the financial industry. So here is the UK's gift, and the UK have taken it. The last 2 or 3 governments have said, we want to embrace crypto. And they're setting up their stall for very sensible regulations.
I mean, even just with the recent MiCA regulatory framework, you also have British multinational bank Standard Chartered claiming that the crypto winter, which began in 2022, is officially over, according to a report from Reuters. In the report released this Monday, Standard Chartered's head of digital asset research, Jeff Kendrick, highlighted several factors that could potentially boost Bitcoin's value in the near future. These include the recent turmoil in the banking sector, a stabilization of risk assets following the end of the U.S. Federal Reserve's rate hiking cycle, and an improvement in the profitability of crypto mining. So he goes on to say, while sources of uncertainty remain, we think the pathway to a $100,000 Bitcoin is in fact becoming much clearer. And now that we have MiCA, the French Financial Markets Authority could fast-track crypto registrations for companies like Binance that already run regulated digital asset businesses in France. Regulators in France are considering the sped-up regime as the EU's landmark bill was overwhelmingly backed by legislators, beckoning a new crypto regulatory era across European states. So there is a lot of FUD out there. There is a lot of focus on the US right now. But just remember that I think, statistically, there's like 85% of crypto that's happening outside of the US. It's hard to imagine that, right? I mean, we have like 30% of the mining here, but still, this is a global Pandora's box, and it's been opened, and it's not going anywhere, and they can't ban it. And actually, technically they can't legally choke it out either, just to point it out. They're like, oh, they can say things to persuade people. They can keep regulatory clarity uncertain, which makes businesses not want to participate because they don't want to get hit with these well notices and fines. But it actually is technically illegal to intentionally create a choke point, which is why they're making it very convoluted and saying it's this and that, etc. But at the end of the day, Ryan Selkis points out, people who say, oh, just move crypto offshore and build where it's friendly, are taking a short-term, costly view. The US has the largest financial market, reserve currency, top software economy for now, and we have the First, Second, Fourth, Fifth, and 10th Amendments enshrined as constitutional rights, right? Freedom of speech, bearing arms. They can't search you, without a reason. Number 5 is right to a fair trial, and 10 is, I don't remember what 10 is. Why can't I remember 10? Somebody tell me what the 10th one is. I got to go back to school, guys. Crypto is at least 2x more valuable and faster growing with a friendly US. In the context of a 1 trillion market, a 100 million campaign to yield 500 billion of incremental value is the only 5,000x you will be able to invest in this decade. So yeah, crypto for me is our generation's opportunity, to really have the greatest wealth transfer we've ever seen. And it's unfortunate because these guys are supposed to be protecting you, but they're really not, right? So you had the head of public policy over at Ripple saying the US's failure to adopt clear regulations means driving activity offshore, which restricts our ability to monitor for illicit and criminal activity. The exact opposite result of what the critics are calling for. While the US continues to focus on enforcement instead of clarity, the EU has taken a big leap forward with a sensible, progressive approach to crypto regulation. We look forward to building and growing in the European marketplace. And, Coinbase may not be the company that you necessarily want to love. I understand they have their pros and cons, but you have to admit that they could just be up and saying, screw this, and leaving and going. But no, Brian Armstrong right here spent the day in DC meeting with members of Congress. We need regulatory clarity in the US for the centralized players in crypto for many reasons: consumer protection, national security, economic growth. The SEC has caused untold harm to America with its policy of regulation by enforcement. We will fight to fix that, right? And then also another video, picture in front of the SEC building right here. Met with the SEC, will continue pushing for a clear rule book in the US. The US can't afford to fall behind on this important technology to update this financial system. Also important for regulators to set policy and then enforce it, not start with enforcement before there are clear rules. At this point, seems like Congress will need to step in. So, yes, this is what we need. Anthony Scaramucci, he made a reference. Basically, he was saying like the SEC trying to rule or have regulation around crypto regarding, the Howey test, or like things that happened in the 30s, 40s, and 50s, is basically like having a car manual on how to drive a car and applying it to an airplane or a spaceship, right? Well, all you gotta do is just step on the gas pedal, and get the clutch going and what. Well, it doesn't work on an airplane. They're different. It doesn't work on a spaceship, right? They fly. Cars don't fly, right? So digital assets are not the same as the traditional assets. So there needs to be a new framework. But again, getting back to Raoul Pal, he does speak out against the SEC and explains once again, they only have so much jurisdiction and so much that they can do.
Do you think the recent noise from the SEC will affect the usual 4-year cycle and the halving? So we're talking about crypto here. No, I think the 4-year cycle and halving is driven by liquidity. The liquidity cycle is driven by the business cycle, and the business cycle has gone negative, and therefore the liquidity cycle is playing out. I've talked a bit about this. Part of my everything code is the fact that this is like clockwork every 3.5 to 4 years, and it's driven by the refi cycle of the US government debt markets, because everybody reset their debts in 2008 at zero, as did all the private sector. The government's 100% of GDP in debt. And if interest rates are 2% and economic growth is at 2%, 100% of economic growth goes to pay interest, which would cause a huge problem. So they end up refinancing all of this, and they use the central bank balance sheet to do it. So I don't think anything with the SEC makes a difference. The US is not the world. I know, sorry to break it to you guys. You may be the world's biggest economy, but as I explained in financial markets, these things are liquid. They shift. They can go anywhere where capital is treated well, and they will. Now, they're not going to ban crypto from individuals in the United States, but they're trying to make it hard for businesses to grow, so they'll just move to the UK or Hong Kong or Singapore, and the world moves on. The hedge fund industry moves there like it did with the financial markets, and then they start trading with the firms, let's say Coinbase based in the UK, and the volume just moves. The institutions did the same in the UK. So US pension funds would set up operations in the UK. They could then do certain things. We've seen it all before. So I think it's a total red herring to even care about what the SEC does. It's a shame for the United States. For the rest of the crypto market, it's just all noise. Remember when they banned China? Or China banned it? Yeah, they've done it 3 times. Nothing happened. The market went up. India, same. It's too big. It's too big, too decentralized.
By the way, during that video, I had to Google it. The 10th Amendment says that the federal government only has those powers delegated in the Constitution. If it isn't listed, it belongs to the states or to the people. So someone in the comments who got that right before the reveal, you're awesome. So yeah, again, there are going to be tough times for potentially the US. BitMEX founder and veteran Arthur Hayes says that Americans are facing an imminent wave of inflation that will severely damage their savings. He says the West cannot allow general capital flight from its markets to places like crypto or foreign stocks and bond markets. Then you need the reader as exit liquidity. The colossal debts accumulated since World War II must be paid, and it's time for your capital to be eviscerated by inflation. If the West starts to sense the mass exodus of capital is on the horizon, it will almost certainly make it more annoying and difficult to pull money out of the system. The crypto billionaire also notes that the US is already making it harder to store money in decentralized crypto wallets, perhaps in anticipation of a potential exodus from the traditional finance system. Moving forward, gold and crypto will be the focus. They are not tied to a particular country. They cannot be debased at the will of a central bank desperate to prop up their financial system with printed fiat money. And finally, as countries started looking out for their own best interests rather than serving as slaves in the Western financial system, central banks of the global South will diversify how they save their international trade income. The first choice will be to increase gold allocation, which is already underway. And of course, if Bitcoin does continue to prove that it is the hardest money ever created, he says, I expect that more and more countries will at least start to consider whether it's a suitable savings vehicle alongside gold, right? And you can see right here, while countries work on central bank digital currencies and other like El Salvador embrace Bitcoin as their legal tender, Zimbabwe has announced a plan to launch a gold-backed digital currency. Now, why not just use Bitcoin? I don't know, guys. Maybe it's too volatile. So the Reserve Bank of Zimbabwe, towards the end of last week, announced that it was working on a gold-backed digital currency that will become legal tender in the country. The move is part of the Zimbabwean government's strategy to keep the local currency from depreciating further against the US dollar. So it is technically already happening. Arthur Hayes is not wrong, but it's interesting because they're not just loading up on gold. They're looking to have a token that is tied to the gold price or backed by gold. So, okay, so maybe this isn't tied to the price. Maybe it's just physically backed by I don't know. They may have to have it 1-to-1 in a reserve. But as you guys could see, the marriage of cryptocurrency and yes, even gold, but it really just seems like this is the way that we're going. And I do want to just end on this. So if you guys didn't see this World Economic Forum, it says that they were showcasing facilities and tech employed by a cryptocurrency mining firm, but they never actually said the word Bitcoin or crypto. But you could see right here, this was, what are these people? What was their name? Oh, I can't remember it. Crusoe Energy Systems. Now, we know that they are involved in mining, and you can see right here, video screenshots, but they're referred to as modular data centers that are located with waste energy sources to use wasted methane systems to generate power. It was noted this enables the production of ultra-low-cost computing infrastructure by utilizing stranded energy sources that would otherwise go unused. So Michael Saylor is like, even the World Economic Forum is recognizing the environmental benefits of Bitcoin mining, promoting mining without using the B word, but we all know what you're talking about. So maybe it's because they were talking about moving from proof of work to proof of stake, and this makes them look a little bit silly. But I think we all know what these are. Data centers. Come on, guys. It's Bitcoin mining. And the company that's in it is known to be Bitcoin miners. So I think that's hilarious. So summarizing everything, it's crazy times we're living through. Don't have too much despair. Don't get down too much on yourself. You know, I am very optimistic about this future. Tough times never last, right? We live through these times and we're living through a historic moment, but this is definitely that moment you're going to be telling your grandkids about. You know, I lived through this crypto exodus, choke point 2.0, crazy madness, SEC, Gensler, fines for everybody. Nobody knows what's legal and what's not, right? Eventually, guys, I think it will come to a place where we will all recognize and understand where crypto belongs. And I think it does personally belong in everyone's portfolio and all throughout the world. I mean, I don't even want to get into my personal stuff right now, but there's just a lot of I'm trying to do a lot of business moves in the background and just trying to explain crypto to these people. It's like, where's your bank statements and all this? It's like, okay, so if I show you digital things in a bank, right, and digital digits that are moving from one part of the screen to the other part of the screen, that's okay. That's legit, right? But if I show you, some Bitcoin or some USDC in a wallet, well, what is that? What are they? Well, actually, the USDC in the wallet is technically more reliable than the money in the bank. I mean, if you have $1,000 in USDC, you have it. If you have $1 million in USDC, you have it. If you have $1 million in the bank, go try to actually pull that money out in the form of dollars. You can't. You can only transfer it on a screen. And it just makes me so frustrated. But I really do hope that society can progress forward and, we can get these dinosaurs out of the system. No offense, I respect the elderly, but maybe it's time to just move on, especially when it comes to technology. Not saying that Warren Buffett wasn't a good investor, but he just doesn't get it now. There's a time and place for everything, and this is the next part of the financial legacy. I believe this is the next part, the monetary policy of Bitcoin and the introductions of cryptocurrencies and DeFi. So again, guys, really crazy kind of rant. Just if you stayed around for the rant, I love you guys. You're awesome. I just like to talk to you personally sometimes. We're pretty down to earth on here. Again, if you guys do want to go to Bitcoin, Miami, get that 10% off on the tickets below. It's pretty cool. So, or just $60 for the after party if you're interested, or not. Maybe you could just catch us hanging around. So that's it for me. Thank you so much for coming back to the channel. You guys rock. You're the reason that I make all these videos every day for free for you guys, because I love you. And if you do want to watch a free tutorial on how to trade, I highly recommend decentralized exchanges. A few exchanges are starting to kick some people off. They're getting a little tougher with the KYC. I think Bybit, for example, is implementing full KYC, I believe. So obviously that could be an issue. There are some solutions to it, which I could explain to you guys later, maybe in another video. But for now, just head on to something over, like Apex. You can totally trade over here. It's decentralized. You don't have to worry about it. There's no limits. They have great liquidity. So, not trying to oversell it, but there's options, guys. There's options. So until next time, guys, that's it. If you do want to watch that tutorial, check it out right here, right now. My name's K-Dub. This is Crypto Zombie. Until next time, stay crypto. And of course, peace out.